Hello and welcome. The Japanese yen continues to face downward pressure with USDJPY hitting 154.48, its lowest level since the past 9 months, a level which was last seen in February 2025. Despite Japan's finance minister warning about the yen's rapid depreciation, market sentiment is still firmly in the favor of US dollar. This year's central bank meetings have set the stage for currency market movements. The Bank of Japan as well as the US Federal Reserve both have done their monetary policy meeting on 29th and 30th of October previous week. The Bank of Japan held its interest rate at 0.5%, maintaining an ultra-accommodative stance with the Governor Kazuo Ueda emphasizing a gradual data-driven policy normalization. Meanwhile, the US Federal Reserve cut the interest rate by 25 basis points as expected, but Chair Jeremy Powell signaled that further easing is unlikely. This difference in policy approaches continues to strengthen the dollar and weigh on the yen. Japan's Prime Minister Sanai Takaichi is shifting focus with the Economic Strategy Headquarters, aiming to boost industrial competitiveness in key sectors like semiconductors, AI, and aerospace. This strategic initiative, although in early stages, signals a move toward proactive fiscal policy aimed at revitalizing Japan's economy. Coming to the plan of action, for importers, the current levels of JPY-INR are around 59.60, which provides a good opportunity for short-term hedging despite the high premiums of 5 to 5.5%. On the other hand, exporters should wait for a potential bounce back towards 59 plus levels to begin with the hedging. The yen's volatility and the divergence in BOJ and Fed policies continue to create opportunities and risks. Stay informed, manage your hedges effectively, and be prepared for market shifts. Thanks for watching and stay tuned for more such market updates.